Trendline trading is one of the easiest trading strategy in the market. But even as simple as it is, a lot of traders are not making money with it in the market. Everyone knows it's easy, but a lot of traders are not making profits with it, and surprising the brokers. But why is that so? That is because they are trading the trend lines the wrong way. They complicate it a lot, and they don't understand the concept that actually works with it. It's not even about getting the lines correctly. It's not about the time frame you are trading the trend lines with. It is not majorly about the confluence of the trend line. It's not even about the size of the trend line. There is something that these traders tend to ignore in the market. While trading the trend lines, this particular secret will shoot up your profits capacity to a very high level and make you highly profitable in the market. And that I will be revealing to you step by step before the end of this video. And by the end of this video, you will find yourself among the 1% of traders that actually make profits from the market. But before we get into that, do well to like this video to help other traders find this video and also become profitable, and subscribe to our channel if you are new here. So my tribe soldiers, let's get down into this business. So there are two ways of drawing the trend line, and you are only going to choose one for yourself and follow it through. The both of them have their different benefits in the market. The first way is to draw the trend line through the wicks of the candle or candles at the last lows or highs. This will help you get trend lines touches faster, thereby giving you more chances of entering a trade. And the second way is to draw the trend line on the wicks of the candle at the lows or highs. This will help you to filter out the best trend lines trades. It will get less touches, but it will give you the best touches. So here we have the market moving in a downtrend, and we draw our trend line at the lower highs, drawing the lines through the wicks of the last candles at the lower highs. See that the market frequently returned to touch the trend line, creating more opportunities to enter the market. But if we had drawn the trend line on the wicks of the higher lows, see that we could have been left out of this trend movement and never get the opportunity to enter a trade. That is the advantage of drawing your trend line through the wicks of the candles. But on the other side, look at this example. So here the market was moving in an uptrend. Then we draw the trend line on the wicks of the candle, and we were able to catch this trend movement here. See how the market returned and touched the trend line, and immediately after that, the market started moving up in the target direction. See that after the market touched the trend line, the market began to rise up exponentially. But if we had drawn our trend line through the wicks of the candles, or inside the wicks of the candles, we would have still be able to catch this movement, but we may lose out trade entries because many traders like to take a trade immediately after the market touches the trend line. So let's say we drew the trend line through the wicks of the candles. By the time the market touches the trend and make this first move, we could have entered the market, thinking it's time for the market to start moving in out target direction, and we place out stop loss below the entry positions. We would have lost the trade, since this market later came down to wipe out the profits and then start moving in the target direction. That is the advantage of drawing the trend line on the wicks of the candles. But as simple as that looks, drawing the trend lines alone does not guarantee us to enter a trade. In fact, drawing the trend lines is the first part of the three concepts that will make any trader profitable with trend lines trading. In the second concept, we would need another component to qualify us to even consider taking a trade before taking the trade. But still, that second concept on its own is not enough to take the trade. We must combine the three concepts together before we can consider making an entry. This way, we can enter the trade with much confidence and more assurance to make profits from the market. The second concept involves waiting for an area of confluence. That means we're going to be applying a support and resistance strategy to the trend line, and this support and resistance strategy is known as the flip zones. A bullish flip zone occurs when the market breaks a resistance line and then trades above it. This way it flips the resistance area to a support, meaning that when the market returns to that line, the buyers will be looking out to take a long trade. because the resistance line has been flipped to a support line, making it a bullish flip zone. A bearish flip zone is the direct opposite. It occurs when the market breaks a support line and then trades below it, turning it to a resistance line. And since that has happened, the sellers will be looking out to take a trade when the market returns to the resistance line, which used to be a support line before the market flipped the structure, making it a bearish flip zone. These flip zones are usually found in trending markets, and since trendline trading is also a trending strategy, the both of them will work greatly together to give us an area of confluence. Now, an area of confluence with the trend line and the flip zones occurs when the market is moving in a trend movement, and then we draw out a trend line. But before returning to the trend line, the market created a flip zone which gives us an awaiting area of confluence. So when the market returns, it will touch the trend line and the flip zone together at the same time, moving into our area of confluence. This gives us more confidence in the market because, first of all, the trendline traders are interested in that zone, and the support and resistance traders are also interested in that zone. So there will be more power to move the market to our target direction. If we take a trade from that point, see how this concept can be a great strategy on its own. But trading the market based on areas of confluence alone is not enough, not because it is not a great strategy on its own, but because we need extra confirmations in order to take a trade with more confidence, and we are very focused on making high profits from the market. The next concepts that we are going to be using is very powerful. In fact, I use it in many of my live trades because it is very profitable, and I drop all my live trades on my Telegram channel. So in order to see how the trading chief trades in real time, you can join our Telegram channel using the link in the description box below. The third concept will determine when we are going to enter the trade, and this is how it works. When the price has returned to the area of confluence, we draw a trend line on the trending movements, and we wait for a breakout of the trend line, meaning that we only want to look out for trades when the market returns to the area of confluence with trending moves. We don't want a straight return to the area of confluence, as that can signal an aggressive move to change the trend, and we don't want that to happen. So when the market returns to the area of confluence, we draw out our trend line on the price moves, and we wait for the price to break out of the trend line. This way we can be sure that the price is heading to our target direction, because this move on its own is already trending against the trend. So when the breakout occurs, we enter our trade and place our stop loss below the last low, and our take profit target at the next high, or 3 times our stop loss. And as you can see, the trade was a successful one. Now, let's take a look at another example. So on this chart, the market was moving in a downtrend, and we draw out our trend line. We also see that there is a bearish flip zone here. So we draw out the line of the zone, which created an area of confluence, and when the market returned to it, you can see the small uptrending price moves. So we draw a trend line on it, and wait for the market to break out, which it did here, and after that, we take a trade, and place our stop loss slightly above the high, and our take profit target at the next low, or 3 times the size of our stop loss. And as you can see here, the trade was a successful one. The take profit target was hit successfully. Now, let's take a look at another example. So here, the market was also moving in a downtrend. So we draw our trend line on the price highs, and right here we have our bearish flip zone. So we draw out the line too, creating an area of confluence, and when the market returned, you can see the small trending movements here. So we draw out a trend line on those small uptrending price moves, and then we wait for a trend breakout, which happened here, and after that we take a trade, placing our stop loss above the last high and our take profit target at the next low. And as you can see here, the trade was a successful one. Our take profit got hit successfully. Now let's take another example before I tell you the best time frame for this strategy. So here we have the market moving in an uptrend, So we draw out our trend line, and we also identified a bullish flip zone, so we also draw that out. Now, our area of confluence has been completed successfully. Then, as the market returned to touch the area of confluence, touching the trend line and the flip zone at the same time. Now, as the market returned to the flip zone, notice the small downtrending moves as it returned to the confluence. So we draw that out too, and wait for a breakout. And after the breakout we enter a trade, placing our stop loss at the last low, and our take profit target at the next high. And as you can see here, the take profit target got hit successfully, making the trade a successful one. Now, the best time frame for this strategy actually depends on the trader, but sometimes we can combine two time frames together. For example, if you are a day trader, you can find the confluence set up on a higher time frame, like the 1 hour time frame, and your breakout entry on a lower time frame, such as the 15 minutes time frame. This will give you a sweet signal with high take profit target and lower risk. Now, in this strategy, I taught on how you can use the trend line to take trades based on market trends, to follow the trend, and make high profits from the market. In this video, I taught on how you can catch market reversals from the very beginning, using 3 different trendline breakout strategies. You can watch this video if you want to make more profits from the market, trading market reversals. We are the Trading Tribe, and it's a wrap for this video. See you in the next one.